If you told someone just a few years ago that a major Wall Street bank would openly outline a path toward nearly $5,000 gold, most people would have laughed it off. But that's exactly what happened in a recent Reuters report. Goldman Sachs, one of the most influential financial institutions in the world, released a detailed outlook for commodities, and right at the top of that conversation was gold. Not as a passing mention, not as a footnote, but as a central theme tied to how global institutions are positioning themselves heading into the next few years. According to Reuters, Goldman Sachs said it sees gold prices climbing about 14% to $4,900 per ounce by December of 2026 under its best case scenario. Now, Goldman wasn't just throwing out a number. They laid out why they believe that outcome is possible, and that's where the story gets interesting. In its note, Goldman pointed first to structurally high central bank demand. In simple terms, central banks around the world have been consistently adding gold to their reserves, and Goldman does not expect that behavior to fade anytime soon. Second, the bank cited cyclical support from U.S. Federal Reserve interest rate cuts. As monetary policy shifts, Goldman believes those changes can influence how gold is viewed within the broader financial system. Reuters also reports that Goldman sees upside risk to its forecast if diversification broadens further, meaning more participants globally choose to spread exposure rather than concentrate it. So this isn't just about one number on a page. It's about who is buying gold, why they're buying it, and how consistently they're doing so. Now, if you're personally curious about how gold could help you, especially when it comes to helping protect your savings, the top-rated precious metals company, Goldco, offers a free gold and silver kit, a clear educational guide that explains how physical precious metals work without pressure or confusing jargon. Just call the number on your screen right now or click the link in the description below to get started. Now let's step back for a moment because gold wasn't the only commodity Goldman addressed, and the contrast tells us a lot. While Goldman sees upward pressure on gold, the bank outlined a very different outlook for oil. According to Reuters, Goldman expects Brent and WTI crude oil prices to decline on average through 2026, assuming there are no major supply disruptions or large production cuts. The reason? Goldman explained that its lower prices may be required to help rebalance the oil market after years of volatility. The bank expects oil prices to reach their lowest point around mid-2026 as markets begin anticipating a shift in supply and demand conditions. But even there, the story isn't static. Reuters notes that Goldman believes oil demand growth, potential declines in Russian supply if the war in Ukraine and sanctions persist, and slower output growth outside OPEC could eventually tighten conditions again. As a result, the bank expects markets to begin pricing in future deficits further down the road. Still, oil's outlook remains tied to production cycles, geopolitical risks, and supply management. Gold's story is different. Goldman's case for gold, as reported by Reuters, centers on institutional behavior and monetary forces, not drilling schedules or output quotas. So when you look at the full picture, two very different forces are at work. One, oil responds to rebalancing in supply. Two, gold responds to central bank demand and monetary policy. And that distinction matters. Goldman's $4,900 projection isn't presented as a guess or a headline grab. It's framed as the logical result of trends the bank says are already in motion, particularly among central banks and large institutions. For many people, that naturally leads to learning more, not rushing, not reacting, just understanding. If you'd like to continue that education, Goldco also makes available opportunities that may include bonus silver or a free Ronald Reagan half-ounce silver coin for those who qualify. Once again, just call the number on your screen or click the link below to learn more, because understanding why major institutions are making these projections and what forces they're watching can bring clarity to long-term planning. And as this Reuters report makes clear, gold is not just part of the conversation anymore, it's right at the center of it.